All right, we are live. Hello, everybody. Another edition of the Weekly Palantir podcast. We are at number 18 here, 18 weeks that we've been doing it. So happy that people are here. Happy that you're joining us. We're going to start off with some discussion around the macro and some of the things that are going on right now. Obviously, Palantir broke above $10 today, so we are at $10.10. That's what we ended today's price on. It's a little weird from my perspective to see this
Are
green.
we are we live already?
We're live. We're live.
Okay, I just
Not sure if I expected it, but I want to ask some of the panelists here on what are their thoughts, what's going on in the macro. So let's start off with you, Chris. Is this a mean bull trap, obvious bull trap, or you think there's some life here?
It kind of depends on the numbers, to be honest with you. I think so many people were bearish over the last month because of all the high oil prices, all the inflation, everything. So it kind of went a little bit too far. I mean, believe it or not, it was actually necessary, but some of it was a little too far. And because of that, a lot of things were already priced in. So what happened is, especially if you look at like the NASDAQ, because right now everyone is doing index investing for the most part. Like very few people are actually like still individually picking stock names. The market has completely shifted to index investing. So one of the things that I started to notice was when you looked at pretty much a lot of the growth names in the NASDAQ, the ones that were unprofitable are down 70, 80, even 90%. So they're waiting in terms of, the ETFs that are out there that are market weighted. They've been substantially diminished. So you've had a kind of a sell-off in some of the bigger names too, like the Googles, the Amazons, the Microsofts, who have a ton of cash and they're cash producing business. So at this point, the question is, what are they going to do with that cash? If they hold on to it in their treasury, it's just going to get burned away, right? Like basically inflation is going to eat it away. And if they buy short-term treasuries are not going to give enough of a yield to compensate for that additional for that CPI change. So it could be revealing that maybe some are instituting buyback plans. I know Apple has a huge stock buyback plan, and because of that, because of the decrease in share price, they'll be able to kind of get even better pricing on their share buyback. So essentially, all the companies that are super profitable are retaining their market value, and as the macro is kind of leaning towards a little bit of a recovery, I think a lot of people are starting to kind of get in a little bit back into growth name tech that is cash flow positive. There also is a pullback on some of the energy related stuff because the sanctions have failed against Russia. And maybe Sachin can speak about this a little bit more, because the whole purpose of sanctioning Russia was that no oil would be sold out of Russia, or very little oil was sold out of Russia. Well, India and China threw that whole thing away. Like basically they're like, no, we'll buy from Russia regardless what the West says. So basically a lot of Russian stock is just being shifted from going to Europe. Instead it's going to India and China. So now the demand for oil is kind of just shifting. It's not necessarily like supply constraints may not be there long term as a lot of people were thinking. So I think overall we're at a point where each side is kind of like, you're going to see a lot of volatility. And what we're seeing right now is a volatility creep towards a market rally, right? That's not to say that next week we can't see the same exact drop come in for a lot of the growth names. So we'll see what happens. But in my opinion, I think the rest of 2022, we more than likely will see some level of a recovery, though I do predict that throughout the summer, we'll probably see a lot of volatility. And one of the things that might be super bullish for a lot of growth names are if CPI actually comes in much lower next quarter. That's going to be big, because a lot of people are predicting huge rate rises for the rest of the year from the Fed. So if the Fed was projecting that they're going to do a lot of rate rising and all of a sudden that's not necessary because market conditions have changed, then that means that we'll rally into the end of the year. I mean, remember, this is the same Fed that got inflation is transitory wrong. So more than likely, they're probably going to get inflation is too high and we need to keep raising interest rates really fast, maybe they'll get that wrong too. So I don't know. What do you
I
guys
do want
think?
to ask you real quick. We are on financial YouTube, and there is a YouTuber named Chicken Genius who is adamant that a recession is coming. And his logic is quantitative tightening means that the stock market will drop. So the stuff, it sounds like what you're saying is things are oversold. Things have already gotten beaten up. CPI could go lower. So there are catalysts to not have a full-blown recession is what you're essentially saying.
I don't think so. No, I think we're definitely going to have at least a mild recession, but recessions
But you're saying
aren't
there's going to be a rally before that, essentially.
well, here's the thing. It depends on which sector you're in, right? Like even during recessions, you have companies that are growing, you still have companies that are profitable. So there's no like, oh, there's a recession, everything is going to go down no matter what. So I think what it is the level of recession that might be coming our way might be milder than what a lot of people are expecting. And if the mildness of that recession kind of made us drop almost 30-40%, which it might be unjustified for a lot of big names that are still very cash flow positive. That just means that now, in terms of market conditions, they're undervalued, right? So, was there a need for a correction in some of the valuations, especially in the tech sector? Yeah, absolutely. But that doesn't necessarily mean that, the right amount of correction happened. Sometimes what you'll see is a lot of overcorrections. And I think a lot of people right now, especially the hedge funds, they're looking at companies, especially like Palantir, who've gotten beat down so much, even though their businesses are still growing. They have tremendous amounts of cash flow that's still being generated. And regardless whether or not there's a recession, Palantir is going to be able to grow its business. If you think about it, that's what they've been professing this entire time. A lot of their revenues is coming from the government, which technically is recession proof, right? So in that respects, a lot of companies that have been unfairly kind of like undervalued right now are getting that, hey, look, now all of a sudden this makes sense to invest in Palantir. I mean, think about it. Even the people who are really bearish against Palantir right now are probably, flipping the script a little bit and saying, wait, I didn't think that Palantir was going to be at $7. I better get in right now while they're still growing, so it just makes more sense.
So Sachin, last week you said you see S&P getting to 260 and Nasdaq getting to 8,000, 9,000 levels. How are you kind of feeling on that? Has anything changed? What you see might be coming?
No, I mean, in my view, nothing has changed from that part. I think we discussed it. So I think let's divide this section like answer in four parts. The first part that we already saw that there was a divergence in the high growth versus the indexes. Okay, so which is telling that the bottoming of stocks in high growth will happen long before the indexes will bottom. Okay, what we see like if the indexes start to sell off, we might see a outflow coming out of indexes going into stocks which are like Palantir, Snowflake, things like that. Okay, that is one part. The second part is we are seeing that commodities and the key currency pairs they are cracking, which are a sign of kind of a bit of zitteriness in the market. Now this time it's a bit different in a way because a lot of time like what happened in 2008 and 9 and what was happening in 2000 at that particular time the interest rates were being reduced. We know this time interest rates are going to increase, which means bankers have better chance to make money so they can hold it for life. There is no reason to change the tide for them, and we all know that how much lobbying power banks have over feds and government to change the policy. So this time they should not be executing that. That is the second part. The third part is like we expect like all commodities to break. Now the oil is in a quite different situation. On one hand, oil should crack because there is a slowing in the economy and next recession is expected. On the other side, there is so much volatility. So when you see like recession fear for oil, it's a low frequency event. When you see the geopolitical volatility that is inducing crisis in oil, that's a high frequency event. Okay, so there's a likelihood that oil hold its level above $100 for a while before it eventually cracks. But before that, someone still has to sort things out in terms of supply, which is not being done. The last but not the least part is that we have been in this era of heavy passive investing. Now, passive investing, if you see it is a volume weighted concept of your index. So what happens if more money goes into an index? A lot of what this portion is actually going to the companies which have higher market cap. So there is a divergence in terms of how companies are valued. So for example, If more money has gone towards a FANG stock, okay, when the selling starts, that means more money will outflow from these stocks also. So the cracking in the higher portion of the indexes is likely going to be higher in the coming day. When I see Palantir, I think people can have their own views, like how they view the companies. But when I'm seeing all the key metrics at which you value a company, I mean, Snowflake is almost 3 to 4 times costly on every metric. Now, that's the question people have to ask for themselves. Okay, that the I mean, it's a wonderful company. I mean, it's just a leader in what it does, but that kind of valuation will require almost 2 to 3 times of faster revenue growth also in terms of Palantir. Okay, if it maintains, I think that kind of valuation is justified. When you compare companies like Datadog and everything, and what Palantir is doing recently, I mean, to me, Palantir is extremely cheap on several of these metrics. Back to you guys. You're mute, Amit.
Sorry about that. So I guess the weird thing here is the nature of this rally. I mean, like, there's not really any catalyst that has happened that has fundamentally changed the potential fear that the market should have about a recession. JP Morgan still has the S&P going to 3,400. A lot of banks and hedge funds are still scared to invest in equity. So I guess the question is, like, do we see this as sort of, if we all believe a recession is coming and the recession hasn't happened yet at 3,700 on the S&P, do we think this is a bear trap, which is like the S&P might rally to 420, 430? We might actually, start to feel better, but then the crash might happen if we believe a crash has to happen in order to get rid of inflation.
So let me take this one first. See, one thing everyone has to remember that we are currently at a $10 level of Palantir, which is almost like 60% higher than recent highs. Okay, so you need to know, like, whenever we make a jump like 50%, like 75, 100%, there's a lot of short-term selling is always expected. So there should be some selling pressure in some portion for Palantir, at least in the retail category. Okay, if it's not in the institutional category. So that is one thing. The second part is that, guys, I mean, for us, recovery, when we talk about Palantir, we're talking levels like $18, $20, $25. Okay, that is still like 100% from here. Okay, we also have seen that stocks are moving in unison. That means it's not like Palantir is the only stock going up. I mean, AI has also moved up, Snowflake has also moved up, Datadog has also moved up. So if we are saying that Palantir has to recover from here to 25, that means market itself has to recover at least in this peer category by 100%. We are not in that kind of macro. What will change despite recession that these stocks can prevail? Because companies will be forced to use more and more data, more and more analysis, and that can reflect on the revenues of these companies. I think the only key metric, like I've discussed in past, if Palantir shows revenues above expectations, then Palantir can actually minimize the gap between the multiple valuations that we have between a Snowflake and other companies versus it. Okay, so are we there yet? No, we are not there yet. I mean, both from market point of view, and revenues will only know when the earnings are released. So
Yes.
I would expect some sell-off. Okay, I do not expect like I mean, I would expect it can revisit if possible at some point the levels of 6 to 7, maybe even lower if there is a very panic-based crack in the market. We have seen like how it happens, but I would expect that the more decline will happen now in commodities and in high weight companies within indexes. Back to you guys.
Chris, your thoughts?
No, I agree with that. I think we're at a point right now where I think the opportunity of not at least dipping your toes into the market is of a higher risk than trying to time a bottom, right? Like, so one of the things for me with Palantir is that, you guys know, I have not stopped my DCA, whether Palantir was higher or lower, because if your true projections are way longer into the future, then you're not looking at the stock price day to day. Like, I know, like, everyone has to have their own investment strategy when it comes to certain stocks, certain growth names. And yeah, but right now, in my opinion, when it comes to the market, I think it's not a bad idea to start dipping in a little bit at a time. Like for me right now, when we spoke last week, you said, what would I do hypothetically with the money if I had it? Well, one of the things I started doing was I started buying TQQQ, which is the triple weighted leveraged index for the NASDAQ, to go higher. And it's probably, and hopefully it rallies into a year, but I didn't go like, oh yeah, let me just toss all my money into it, hoping that I see a huge gain in the, I mean, I wish I did, because I'd be up like 30-40%, but essentially every day I just put in a little bit more, because I do feel like we're probably going to see a recovery by the end of the year in certain names. And those certain names are at a higher weighting in the total index, the underlying index, which is triple leveraged. So I think overall, yeah, right now might not be a bad time to get in at least a little bit. I'm not saying go all in, try to go straight crazy with putting all your money into it, but the risk of missing out on some of the early gains may end up not being so good. So I would say probably just, put a little bit of money in some of the TQQ stuff. Not a lot, just a little bit.
Okay.
I do have to say one thing, and maybe Sachin can elaborate a little bit. One of the things that I think a lot of people are saying with this whole inflation thing, majority of the inflation is coming from a lot of the money printing that was done by the Biden administration and the Trump administration before it. But one of the things that I've seen is that a lot of that money has been soaked up in different parts of the economy, right? And it's also kind of trickled all the way up. The question that I have right now is, when I look at the inflation right now, what are some of the main causes of the inflation? Everything kind of just points to energy, because energy has that underlying effect of the rest of the market. So an example is, oh, food prices are going up. Well, how are you transporting your food around? Because of gasoline and energy that you're using, right? Energy itself is going higher. So that is causing more inflation, because now the cost of that is up there. And then you look at some of the other products that you have, the transportation, all the leisure activities, everything requires gasoline built into that supply chain. So when it comes down to it, if I was the Biden administration, I would be doing everything in my power to unlock as much energy as possible to get energy down. Because if you can get energy down, the rest of the stuff will come down too. All the production of transporting goods, producing goods, for the most part, a lot of it comes from hydrocarbons. So right now, I hope the Biden administration is willing to at least forego some of the climate change promises that they made early in their political, dramatizations, and realize that the economy is still, like, you have to slowly transition the economy. You can't just go cold turkey, like canceling the Keystone Pipeline, all that stuff. There's a lot of, the one thing that I do, and maybe such a good comment, there's a lot of energy that's untapped right now that a lot of people don't realize. Like, if you look at refining, right? There's so many refineries in South America that are currently mothballed. They're not doing anything, even though one of the reasons why we have such a big issue with gas prices is not necessarily the supply of oil, but actually it's the refining. So right now the crack spreads are super high, but the reason for that is because all these refineries have been kind of closed, and we're not building any more refineries because it makes no sense. Why would you do a 10-year capital project when in 10 years, every car company's already said our goal is to transition away from gasoline, right? So maybe Sachin can elaborate a little bit about that.
Yeah, I think Chris, I think that's very well said. Before I answer that, I think one thing I have to acknowledge. I think when I see like last 6 months, I would have to appreciate that your strategy of picking companies. I mean, even though I disagree at time, but I think it has given a better outcome and results over the last 6 months. I really appreciate that, man. There's a lot of learning for me there. When looking back on energy, I think this is what Aisha and I was discussing also. I think the one of the things that is broken in the European and the US energy policy, and nobody's acknowledging it, the policy should encourage access to more affordable energy. You don't have to worry too much about like clean and oil and gas, because eventually clean energy will trump oil and gas more and more. That's what it has done, even when the oil was cheap between. What is happening is that the European policies and the US policies is actually restricting production of one kind of energy to prefer other, which is not yet ready to replace. And that is the challenge. If you see the case of China and India, Their idea is very simple. We need a lot of energy. If you unlock as much energy as possible, the energy prices eventually go down as by a lot margin. And you know what happens when the energy prices go down? People don't invest in oil and gas. Because the reason people invest in oil and gas is because it's a high risk, high reward kind of an industry. While if you see the case of renewable, it is low risk, low reward. So what happens for high risk, high reward, they move to the tech and the biotech sectors. So the policy, when it is trying to restrict oil and gas, it is actually making oil and gas longevity and the transition slower. And you don't win if people are fighting all the time. Okay, but focus should be for the US and the for Europe is unlock as much energy as possible. You can tighten the rules and regulation, but you don't restrict business. You don't play my favorite boy. Okay, this is what is happening at this particular point. I was very happy when I saw like Biden was meeting the offshore wind people in White House, because I mean I have criticized administration in past that the offshore wind segment in US sucks compared to what is happening in China and what is happening in Europe. But offshore wind, we are talking things will happen in 3 years, 5 years, 10 years, 15 years. Okay, if the current crisis for which is forcing a 3 months gas break, okay, that is happening now, and for the very same day there were oil and gas executives also were present, and he was not meeting them. If you need help and you do not have the courtesy to go and ask for help, I mean you are a bad leader. There is no, I mean you are working only for the image here. Okay, if you I totally agree with you that the reason there is a lack of investment in energy, especially in the oil and gas part, is because there is no certainty, and also there's a bit strategy from the companies to put pressure on. But all they need to do is unlock as much energy as possible. And guys, be very clear on this part. There is no, until and unless you bring oil below $70, okay, forget that inflation can ease. Inflation can reduce, but inflation is going to stay higher than whatever we have seen in last 7 years. Oil has to come below $70. No question.
Why has oil been dropping recently, Sachin, over the past week?
See, the oil is dropping recently, and all the discussions I'm having is first, I mean, the recession fear. I mean, oil moves early. It's a very speculative commodity. It moves very fast. It has moved a lot. Okay, it's already in a very healthy domain. But then there's a risk like other commodities are failing at this point. If you see what is happening in copper, what is happening in uranium, a lot of commodities have started to fall. What is happening in steel now? So commodities, so there is a risk that happens in a commodities basket itself. If all the commodities are falling because of recession fear, oil has to take over. But if you see, oil is also resisting a lot. Okay, oil hasn't fallen that much because everyone knows that yes, I mean there is a recession coming, but even in recession you will need certain supply, and right now investments are not even enough to actually keep it flat. Because normally, I mean, if you keep the decline, there is a natural decline in oil production that you need to invest just to maintain it. Right now, that investment is not good enough to maintain the natural decline. It can arrest some decline, but it cannot completely take it off. Forget getting excess oil. Okay, so oil is slightly diverging. I mean, this is where we talk about people, and people talk about like statistical arbitrage trade when two commodities will normally track each other, but when they start diverging, I mean, people go for a very different kind of a trade. They go long on one and short on another, because they are not betting on like which is going up and which is going down. They are betting actually that this divergence will actually reduce over the time. So it's a different kind of a strategy. I mean that people, especially the hedge fund, deploys. So oil will have pressure, but as long as we have these geopolitical uncertainties, we have the news coming in like fire. I mean, I don't know how many refineries have got fire in the last 6 months. I was quite surprised actually. Also, what is happening is, and this is what we'll see in the Q3 and Q4, is because oil was high, everybody was delaying maintenance and inspection because everybody wanted to pump as much as possible. But at some point of time, that delay will aggregate in a lot of maintenance inspection in refineries, in pipelines, in oil and gas field. That will also affect production, at least in certain parts. So oil will maintain higher or will not drop as much for now, in my opinion, relative to other commodities. But until and unless oil goes below $70, Yeah, this inflation thing is, I mean, you use oil for everything, for petrochemicals, for all the transportation. Oil is everywhere. So yeah, I mean, this is, and for to get it to below $70, I mean, somebody has to find out where the next 4 to 5 million barrel oil is coming, which we don't know at this point.
So if we are having a rally and oil's not at $70, is that natural to you or no? Because inflation's not getting better at that point.
See,
Like how
when you
my
see,
question is, how can any economy reduce inflation if the market is rallying? Right? Like that doesn't make sense.
I think the answer is between 2010 to 2019. I mean, what was the inflation in US when the economy was rallying?
It's about 2-3%, right?
The reason for that is because, see, the economy in the US was growing more on technology and business value disruption basis, okay, which were focusing on getting products faster, getting products cheap, okay. So it can be achieved because your economy also expand from that part. The challenge currently is like when inflation is high,
It's already high. How do we reduce it?
then economy can still expand, but it expands in a disproportionate manner.
Yeah.
Okay, because what is happening that certain companies can produce goods and widgets better than other. Okay, there is when the inflation is high. I mean, if you guys, I mean, have read the Michael Porter's five forces. I mean, he talks about one of the force was the threat of substitutes. When the inflation is high, the threat of substitute force is actually become more important. Okay, people really look for substitutes in that part. So different kind of business industries actually evolve. Okay, the semblance like what we are seeing in the, especially between 2015 and 2019, that every Tom, Dick and Harry company was raising like 10 million. I mean, like anything. I mean, that's what I feel bad for you, I mean, because by the time you are raising capital, this is the worst time to raise capital because it's dried up. If you would have done it like 3 years back, you probably would have been sitting on 50 million by now.
Yeah, and that goes into a lot of sectors too. Like if you think about it, anytime the price of anything goes higher, you always have the innovators come in and try to do it much, much cheaper. So an example is if you look at the early 2000s, a lot of people were like, oh my God, the price of oil, the price of oil. Well, that's where all these people started to do shale and fracking, right? So they ended up investing in shale and fracking and went freaking super crazy with it to the point where they brought oil down to some of the lowest prices that we've ever had. But that took almost 5 years of, transitioning to it. I think the other thing is when you look at demand, right? As prices go up, demand naturally has to come down. Like right now, I know people who've cut back on driving because they can't afford the price of gas, right? So that naturally will destroy some of the demand. Plus, the Middle East and a lot of the larger producers, they have to take into account that if prices of oil stays too high for too long, that just invites more longer term investment in other parts that may end up degrading them in the future. So it's almost like the Middle East and a lot of the larger producers have to do this balancing act a little bit of keeping oil price enough to the point where they're benefiting tremendously from it, but not enough to the point where you're inviting the shale drillers to get back into the market and start to invest and then destroying their market share. Because essentially that's what they're trying to do. The Middle East is trying to maintain its market share for a long term. So I think right now we're seeing some of that also, but yeah, go ahead, Sachin.
No, I agree. I mean, like, see, I think this is the key message everyone has to see. See, Qatar is the largest producer of LNG worldwide. Okay, when it comes to exports. Okay, now Qatar wants to increase their production. Okay, when I say increasing production, like they want to increase by a certain margin and at least half order of magnitude. So Qatar goes and Qatar talks to super majors. They talk to ENI, they talk to Total. They said, okay, we need to do. Now Qatar is sitting on the top of the technologies, top of the project management, okay, top of the exports, and yet they go to these companies because they know what they want to do cannot be achieved with the excellence of the major companies in the region. Now look what EU and US is doing. Okay, EU and US are not, they are actually trying to penalize this company. So how would you increase production? I mean, this is not a convenient fact for anyone to digest. But if you are want to increase production with a very large margin, it cannot be done without super majors. That's period. I mean, I was having a discussion with some of my friends and some of, I mean, let's say a close forum. I mean, back in India, And there was a discussion going around like increasing production of India, and they were discussing like how can we increase more companies to participate. I said, I mean, that's the same thing. You can do all kind of policies, and India has done all the NELP and HELP and OLEP. I said there is still no incentive for large companies to come and invest. And as long as large companies don't come and invest, you cannot increase production the way you want, two times, three times, four times. That's the end of story. This is how the industry exists as of today. So if you start penalizing the major companies, okay, if you don't like them, if there are issues with that, you work to improve their regulations, their practices, their corporate governance. But it's not like this, man. These companies were in shambles between 2015 to 2020. I mean, government was not giving them any olive branch, and now I mean they are coming quite aggressive of them. Think back, what's the end game? End game is to make life of your countrymen better. They are not doing it. So I don't. So until and unless there is a sense that prevails in this situation, I will not put a lot of hope on the recovery. I mean, recession. Yeah, I mean, my understanding is that it will hit. It's mild, it's high. I don't know, but it's not going to go away soon. Okay, back to you.
Talking about Palantir, $13 price target by Bank of America. Chris, what were your kind of any of your thoughts? I mean, obviously 13 is still lower than most of our averages, but it's nice to see them increase.
Yeah, it makes total sense. I mean, if you're thinking about, if you're projecting out a recession and you're trying to value a company, you need to value companies based on the longevity of that revenue and that revenue stream, right? So an example is with Palantir, a lot of their revenue is coming from the government side and its growth is coming from the government side. And plus right now we're in the middle of supply chain crises and war. So which means that for the most part, you're not going to see a dramatic decline in Palantir's growth prospects. So if you don't see that, then you should be valuing them higher than what you would be valuing another company who's purely doing just commercial. So in that regard, a lot of this was due. I read the topic, and yeah, it makes total sense right now because if you think about um, how Palantir is probably so involved with this Ukrainian conflict, there's probably billions of dollars that are already in Palantir's like balance sheet that are probably going to show up in the next 4 quarters. And then over a longer period of time, a lot of these European companies who've increased their defense spending are probably going to be utilizing them too. So in terms of a business, a lot of people have been focusing on selling to the commercial side. Well, now commercial is probably declining in terms of usage for products, whereas the government side is probably more inclined, especially in terms of like military application and security application. So in that regard, Palantir deserves to be valued at a higher rate than a company who's purely working in just a commercial side, which might end up, being hurt during a recession.
So I think there are two things that have changed for Palantir in last 6 months. The first thing was that Palantir was always the punching bag of liberals all the time. Okay, Palantir do this for ICE and all that, and NHS.
We'll talk about the article in a second. Some of the
Yeah.
Guardian stuff.
The thing is now when the Palantir support, when you look for Ukraine, I mean, it's more than any liberal company has done for Ukraine. Okay, so the idea for Palantir and the branding they wanted to make all the time that we are working under a philosophy and a mission that has nothing to do with the dams or RAPs or what's the European politics look like. We are looking for the overall foundational principle of Western democracy. I think that is being pushed. Okay, that is first part. The second part is, and this is where I think the analysts are. I mean, analysts are more political and diplomatic how they price the stock rather than how they actually see. Okay, we have seen in past a lot of people actually don't even understand a part of the business here. See, the Palantir valuation is low for three reasons. The first reason is that at rate at which their revenue is growing, which is lesser than when we see the companies like Datadog and Snowflake. That is one. The second reason their valuation is low because there is low institutional ownership. Okay, the third reason their valuation is low because they are getting far cheaper multiples in terms of different financial metric compared to their peers. Okay, when you raise the price, that means you're saying that there is an expectation that it will do better than in revenue. What happens is the other two metrics also improve. Okay, and that is the difference between the appreciation between the price that will happen in Palantir versus what will happen probably in a Snowflake. Snowflake already has very high institutional ownership. Okay, it is one of the costliest stock in the market at this particular point. Okay, so how high it will go? I mean, so thing is like when you're looking in terms of growth, so the first issue in terms of how fast revenue can grow, that is something which Palantir has to tackle by itself. Okay, and that's pretty much the only thing that defines that what's the valuation should be. If you take today Palantir and Palantir matches the revenue growth, what Snowflake is doing at least for 3 quarters. Okay, and so but basically what we are saying that at this particular year we're expecting Palantir to have revenue say somewhere close to 2 billion. Okay, so what we are saying is that revenue, I mean, once it starts growing, we're talking revenue that will go like 2.3, 2.4, something like that. Okay, and even if the Palantir doesn't reach the multiples in terms of PEG, forward PE, I mean, forward PE is actually off by 20. I mean, Snowflake forward PE is like 20 times more than Palantir. But let's say in the terms of sales revenue itself, and even if it doesn't go like 3x, like where the Snowflake is, even it goes 2x, we are still talking of a valuation that is going to be north of 70 to 75 billion dollars. Okay, that is almost like 3x gain from here. Okay, but in order to do that, Palantir has to start increasing the revenues more than what they are projecting. It's a very simple thesis. Okay, back to you.
I agree. I think the two main things that the Bank of America analysts pointed out was it was like logical stuff, right? Growing demand in AI and data analytics. And it's like, okay, that makes sense because Palantir is one of the most premier players in that space. And then second was the defense spending. It's going to be about 750 to 850 billion this year in terms of the defense spending budget, and we don't know how much of that is going to go to Palantir. But part of the reason there was a decrease in government spend was just because that budget was in installment from the Democrats and Republicans arguing about it. And then in 2026, he says it might go to $1 trillion, or that's at least what Bank of America is estimating in terms of defense spend. So if you think 4 years from now, in 2026 is $1 trillion spend by the U.S. government, and Palantir wants to be the software prime, if the next 2-3 years they are the premier software defense contractor, then that's a reasonable place to expect Palantir to be $13 if they're in that industry.
Yeah, that's yeah.
One thing US has to be very clear at this particular point is that how fast they want to improve it. I think time is something which is of more critical, like what China is doing and what we have seen the data can do in terms of an actual conflict between what we've seen in Ukraine and Russia. The choice for US is following, that either they go and they try to make solutions and handle all the relationships they have, and they eventually build something that might work, might not work, or they really want to go and build something that works on the get-go and it works fast. Okay, so it's pretty much defined by the quality of leadership in the defense, which the messages they have given, I think it looks very positive for Palantir overall. The quality of leadership in overall in terms of like Senate and House, I think that's where my concern lies. So whatever happens, Palantir will get a big bite of defense's budget, because what it does, a lot of companies don't do. Whether this bite can be a huge bite or a good size bite, that depends on the sanity of US Senate and House, and and the president in some aspect.
I think one of the things that we should talk about is the way that war is evolving. If we look at this Ukraine conflict, one of the things that you have to really take a look at is that war is evolving to the point where it's not necessarily the country with the best equipment and the best, like the most troops, that end up winning. Intelligence at the right moment at the right time as actually a force multiplier greater than anyone would have expected. So an example is, you can send 100 tanks into Ukraine, but you have a bunch of these guys with javelin missiles. If you give them the intelligence on where those 100 tanks are going to be next Tuesday, guess what? They can prepare an ambush, take out 100 tanks, which means you could have spent close to $1 billion on arming all those troops, getting all that tanks, all the supply, all the logistics, and instead you just have a bunch of guys with some rocket launchers being more effective at taking that out. So the way that we conduct kinetic warfare is evolving considerably. So we're going from a very using a sledgehammer to attack someone to rather more like a pinprick, right? Which one is going to do more damage? It's going to be the one where you're able to kind of focus in on the area that's the most sensitive to that. So right now, the Russians, even with all their military might, all the people, they're still not able to completely conquer Ukraine yet. And one of the reasons why is because the intelligence infrastructure and also the command and control infrastructure that Ukraine has, thanks to Palantir, what Palantir is probably providing them, is helping them have a little bit of an edge. Otherwise, if this war was conducted back in, let's say, 1950s or 1960s, the Russians would have ran over the Ukrainians like, within a week, right? But so we're looking at a whole different landscape in terms of how do you conduct war. And in that regards, I think Palantir is best positioned for it because they're able to kind of like generate a lot of value from that. So an example is right now, the US spends so much money on hardware that literally is never used. It's never fired. It's never, it's like we buy these aircraft carriers, we buy these, B-2 Spirit bomber, which drops a few bombs in one area and it's super stealthy. But look at how much money you had to spend in R&D and you got a couple of planes here and there, right? Instead, if you had if you had software that can, let's say, target an entire grid of like another country, which one is more valuable? The software that's going to be able to get you to the end goal faster, or buying this giant piece of military hardware that doesn't necessarily do that much damage to you. So I think in that regard, you're going to need a lot of great software engineers that are going to be able to help develop that defensive and offensive capability for the next century. Right now, if the U.S. wants to fight a war with China, which inevitably we are going to get into some level of conflict, what do you want to have? Do you want to have a bunch of tanks and a bunch of aircraft carriers and a bunch of planes, or do you want something like Palantir, who's going to tell you exactly where every single Chinese sub is, and you could just happily launch an ICBM from an island and take out a submarine? Like, which one are you going to want? I'd rather get the system that I can just press a button, know where the hell this thing is, take it out, rather than to get 10 different submarines to try to go hunt one submarine down. So if you think of it like that, the value proposition that Palantir is offering is tremendous. And I think that's where they're gonna capitalize. I do think that politically, though, Palantir, if it weren't for their affiliation with Peter Thiel and Trump, I think they would have been in a much higher, more in there.
Let's transition to that right now. I was just about to share my screen since you brought up the topic. So I did an article on dailypalantir.com, which everyone should check out. And it was the problem with the Guardian's recent article. So I'm going to read what they said, and then Sachin, I want your comments on an excerpt from this article. So they write, but the prospect of it setting up an overarching data platform for the NHS England has alarmed Foxglove, a UK legal campaign group that focuses on accountability. Foxglove's concerns and those of similar organizations center on two aspects: the safety of patient data and the nature of the company that will set up the data framework. A firm like that, meaning Palantir, has no place being the operating system for the NHS, says Corey Scheider, a director at Foxglove, who adds that the company makes no secret of its desire to keep profiting from war and surveillance. Last thing says, we've got deeper concerns about this federated data platform. How much confidential patient data is going to be swept in? Who's going to have access to it? It's clearly not being built just for your GP. It will serve a host of other governmental officials. We've sent a legal letter seeking answers and received almost no details. So they have two concerns. One, that Palantir will exploit and profit from this patient data in the NHS's new federated data platform. And two, that one company should not have the centralized control over all that data, given it's a nationalized healthcare system. So when you hear those things, Sachin, and how they talk about Palantir, any sort of first thoughts that you get? You're muted.
Lost the browser. I was looking in the meantime, like, who is funding the Foxglove? See, the thing is like, see, UK has this culture. I mean, like, you have the non-profits, and they kind of complain at times and they protest, which is pretty good at time also. But we have seen it in past that a lot of this funding that comes from groups which are a bit dodgy at times. Okay, we have seen. I mean, I'm least concerned about what Fox Club is doing, because people like we have seen that Open Democracy funded by Soros has done it. People will keep doing it. And the reason for that is very simple, because if you want to build a global order, you want people to comply on your principle and whatever you say them. And this is what like a lot of Silicon Valley does to especially to a large liberal order up to a large extent at this particular. Palantir is not doing it. So this kind of attack is going to stay on Palantir, no questions asked. Okay, but this is why I said that what happened in Ukraine is actually good, because it is challenging the narrative from some of these news articles that are coming. NHS, when they did it earlier, okay, I mean NHS always knew that whenever they are going to touch Palantir, these kind of things are going to happen. So I'm certain that people are not losing sleep in NHS over it. Okay,
What is
NHS
your response to the argument that Palantir profits off war? What is your response to that concept?
Yeah, it profits from the war, but it
That's
doesn't.
what I was like, yeah, they do.
But it doesn't tell people to go to the war also. Palantir is not creating war. Palantir, and you need to understand like what is war is an unfortunate situation. Okay. If a war is happening, the question for everyone is different. Okay, do you want to win the war, or which side should win the war? Why they don't write articles about UK? I mean, UK was involved in several wars. I mean, UK military was involved in the Iraq invasion also. And there are so many things. I mean, when war happens, everybody knows there is a. You go to Netflix and Amazon, and you can see more than 1,000 pictures on how the people are profiting from war. Okay, so I mean, it's nobody talks about the industrial military complex. Okay, I mean, when US went into Afghanistan, did people profited from the war? Yes, people profited from the war, but people also profited from the NGOs activity also, and that's what nobody talks about it. See, when you donate a money to an NGO in Europe, and say you are donating this money to an NGO to support somebody in Afghanistan, you know exactly what happens. First, the office that is sitting in Europe, first they take 20% as the overhead cost. That means people who are sitting there. Then there is some office that is sitting in Afghanistan that takes another 20% as the overhead cost. Okay, then how the rest of the money has to be distributed? That money actually goes to selected companies who are actually funding the NGOs or funding relative ecosystem of partners and nexus, whatever you call it. At the end of the day, only a portion of that money actually goes for the people it was intended for.
Yeah.
So NGOs actually profit from creating a lot of situations or talking about like, okay, raise money and all that. They don't distribute that money to all these people. They are also profiting from the war. So saying that something profit from the war is not entirely true. I mean, they are in the same bucket. There is no difference here.
It's also
It's not.
it's also,
Yeah.
well, one thing, Chris, it's also funny because people are acting like Palantir was in Putin's ear saying, hey, you should go invade Ukraine. We're going to like, no, like it happened. And now you need something to stop it. You know, you need technology it's not like they wanted it to happen.
And one of the things, I mean, like Fox Club has been funded by Open Society Foundation, which is a George Soros front. Okay. So, the guy is just pissed off. We have seen, I mean, the Open Society, I mean, see some of the work when you do a charity, see anybody does charity, it benefits someone. But people do charity with a certain agenda, and Open Society is just another name for that part. Okay, so I mean, like, yeah, in UK is one of the front where you can fund the NGOs and they can speak whatever you want them to speak, and that's exactly what they are doing. And Guardian is stupid enough to actually publish some of these things. I mean, we know what is the status of print media globally nowadays. I mean, I was looking one of the largest print media a few days back for an investment purpose, and when I saw the valuation was like 690 million, I said, dude, I mean, I cannot imagine such a big brand with that kind of valuation.
You're talking about Forbes, right?
I'm not talking about anything. I'm just talking about.
All right.
Okay.
All right. Chris, your thoughts?
I'm just making an example here.
Whenever I look at a lot of these nonprofits, I have found very few nonprofits that aren't necessarily built on a foundation of just either cleaning money, holding money, or basically pushing an agenda that their underlying people are trying to push. Like there's very few that are actually doing it out of the goodness of their heart. I mean, you look at and it's not just war where NGOs profit from, it's social issues. Like how many people right now are benefiting from all the social issues that we have right now, like that are just political social issues, not real social issues that where actually people are in need. It's just a bunch of, I don't know. I have a very not so great opinion on nonprofits for the most part, so I'm not going to talk about it too much. But there is one thing I do want to talk about, and that's China. My experience in the military, I can tell you, I think a lot of people are giving the Chinese a little bit too much credit in terms of how superior they are in total numbers and all this propaganda that you see on like TV, like, oh, the Chinese are coming, they're going to be the next big superpower. Yeah, good luck with that. I've seen and I've researched how fundamentally China is. It's still a very corrupt country. One of the biggest problems that China has is there's like, and there was a really good quote that says everyone in the world is afraid that China's going to be the next superpower, and China's biggest fear is that they'll never be a superpower. And that insecurity is the reason why they're literally like monitoring every citizen. That's why they're putting 1 million people in concentration camps. Tell me a society that people are like dying to be a part of. China is not the one that people are saying, you know what, let me try to break into China and live in China. So I think a lot of people right now, they're giving the Chinese a little bit too much credit. They have an aging population. They have a government system that in the short term can show like rapid growth, but in the long term ends up causing a lot of friction. And I feel like China is not necessarily it's literally a paper dragon, in my opinion. So I think we have nothing to worry about from China if the US can maintain some of the core values that it's had a long time. A lot of those core values are eroding though. And that's the thing that scares the shit out of me. Like when I see certain things happen, like, where people are not showing as much importance in certain aspects of American values that have made it as good as the country it is today, that's when I ask myself, like, hey, maybe the US is in decline. But in terms of China being the next superpower, nah. And if China's 10, 20 years away, India's 50 to 100 years away from being a superpower. And that's coming from someone who isn't Indian.
Let me add Sachin's screen to the board. Go ahead.
So just to show you guys, I mean, these are the like parties who are funding, Fox Club, which has actually raised this issue. Okay. And you can see like this thing here, Open Society Foundation. Okay, now if you go to Open Society Foundation and you try to look like what they do, I mean, it's a foundation, it does a lot of NGOs and all that. But I think anyone who has followed investing, and George Soros is one of my favorite investors as well, is that people have different agendas and he's putting a different kind of ideology. So he's pretty much like funding this is the same guy who invested in Palantir and who made money in Palantir. Okay. Now, Palantir started their work with CIA. So anybody who's investing money in Palantir and say, oh, I didn't know about that they work with government or they work with the spy agencies, I mean, that's bullshit. That's pure bullshit. Okay. We have seen, it's the propaganda is very clear nowadays, like who is supporting whom and who is going after whom. So there is no surprise there. I mean, George Soros has money. He has a whole network of NGOs that he can instrumentalize, pushing anything, and he's just doing that. I mean, and UK is a
this is mainly because, yeah, on this thing on the screen right here, it says Open Society supports for free organizations fighting for freedom of expression, accountable government, and societies that promotes justice and equality. Palantir seems to be like the perfect company for that because they don't work with Russia and China. So it's like when you talk about freedom of expression,
there's a difference here. I mean, this is what they have written, but this is not what they want. When they say that, they want people to follow their agenda. They want people to control things. See, Palantir has an independent view on a lot of things. They may agree on several things with Soros. They may not agree with things with Soros. They may not agree with how things are done. Soros may expect Palantir to give a certain favor, to have certain kind of information control. I mean, if you are running or playing or controlling the world in some sort of like a shadowy network, directly or indirectly, you're working with political parties. I mean, you need these kind of things. Okay, when Trump and Thiel event happened, it was very clear at that particular point that for liberal Democrats, it is very difficult to sway at least the top brass of the company. Okay, now we know that like how Alex Karp is a progressive liberal. Okay, but what happened was like the company became per hire. People do not want to attach itself with it. They want to attack it, and that's pretty much what is happening. What Peter Thiel did in Silicon Valley, nobody does, and that's why if you remember that time when Peter Thiel did it, I mean nowadays we have seen the Trump presidency. We are also seeing the Democratic presidency that came after Trump, which is no way close to what Democratic Party was during the time of Obama. I mean, but if you go back to 2016, when people were not even sure that Trump will get the nomination, and Peter Thiel came in forward to support him, that was outrageous for a lot of people. I mean, it was outrageous for me. Okay, so yeah, but people see if you have lived 75 years, you have already made up your mind what you are going to do for the rest of your life. People will not change. In this particular case, it's very simple. George Soros has money. He has a network of NGOs which does a lot of good work, but also promotes certain kind of political agenda. He is using that network to attack Palantir because he's saying that Palantir is making move with government in Europe, which he wasn't expected. It already has a foothold in US. It is also making moves in commercial, and it has done wonderful job with Ukraine. You don't want to gain it more Palantir is not only gaining commercial customer. Palantir is gaining influence with government, and that's what scares a lot of people. Back to you.
Yeah, no, I would agree. I think that's where we end it for this week. A lot of interesting stuff to see what's happening. I think this NHS federated platform will be decided around November. So Palantir did hire another one of the former NHS chiefs on staff, so they're definitely lobbying to try to get this deal. And we'll see if Foxglove has any impact on the public perception of Palantir to be able to land the contract. I think that's it for us.
Nobody gives a shit about what Guardian is typing. Nobody gives a shit about that. Even the people who are working Guardian, they don't give about it.
I will say this. So many people don't realize how piece of a shit George Soros honestly is. Like, if you look at 1992, he literally almost crashed the pound. Like, this is not a good guy. Like, a lot of people think like, oh yeah, you know what? These guys that are super rich, they're donating all this money. There must be good people. Like Bill Gates, this guy's a ruthless businessman who like took out companies in the 90s, right? No one with that kind of money, you don't get to $1 billion or what the level of money that they have without running over a lot of people and a lot of industries. Like,
how did Soros make his money? Did he have a business or?
So one of the most famous trades that he had was the London pound.
He's the guy who broke the Bank of England.
Yeah,
that's the biggest title he has.
Mm-hmm.
I mean,
but how did he make his billions?
Like, he is a phenomenal investor. I mean, if you read the Market Wizards, you will actually read about George Soros. I mean, you remember the story and the incident I talk about the Stanley Druckenmiller, like two investors, where Stanley Druckenmiller had a very high conviction about a company. And he's working for George Soros. And he says that I'm so convinced we are going to put 100% money in it. And Soros says, I'm disappointed. If you're so convinced, you should put 200%. I mean, George Soros is really, I mean, that's why I said he's one of my favorite investors because it's ruthless the way things he does. Okay. But it doesn't mean I acknowledge him at a personal level. I totally agree with Chris. I mean, nowadays, we are seeing that Bill Gates is donating a lot of money. I mean, I really appreciate. I've seen like the vaccine work that happened in Nigeria when I was there. But Bill Gates has collected so much money from so much billionaires. Okay, and the idea was to improve society. But if you see what Bill Gates has done during the 90s, he was ruthless what he was doing. I mean, he was a really, you can put all kind of profanity to him what he was doing in the 1998 when the antitrust thing happened. I mean, he wanted to clean the image. But you see how bad he is as an investor. He was the richest man in the world. He had all kind of influences. He collected billions of dollars from other investors, and he wanted to do something about clean energy. And what he did, he just got some pilots running. None of his companies actually commercial even at this particular point. So how bad he is as an investor. When I see Breakthrough Energy as one of the cornerstone investor in some of the investments I make and I promote. I always say that's good because you can show that there is a, but these people are not good in, I mean, they are just good as a name and getting money in there. They're not like a strategic investor. If I see somebody, BMW is there, Tesla is there, Red Bull is there, I know, because these people, they know how to get things done in this space. So a lot of people in a lot of the space have kind of an aura, but they are actually pretty bad at it. Okay, and this also think that money, that kind of effort, that kind of political influence, and what he has achieved with it, it's not in proportion of that. So to me, like, I always consider Bill Gates as a poor investor.
One of the things, Amit, I'd recommend you do is watch this show on. It used to be on the History Channel. I don't know if they're still running it anymore. It's called the. I think it's the Titans Who Built America or something like that. I'll send you a link to it.
I heard of it.
It's if you're trying to like start a business, you should watch it. It gives you this really good idea of motivation on how some of the giant titans who were able to develop industries, what they had to do and how they got around to it, even how they negotiate and how they talk to some of the things. I mean, some of it is also luck. Like I've also seen tremendous amount of people who had great ideas, and great execution, but they just had terrible luck in timing when they started their business. So a lot of things have to go right to get to the point where they're successful. But yeah, it's definitely worth watching. Yeah. By the way, I am going to do a giveaway on one of these 3D printed things. I know someone asked for it. They're basically, yeah, I have a bunch of them. So yeah, I think one of these days, just comment on the comment section and then I'll reach out to you and I'll send you one. I have to give some to Amit and some of the other people.
Follow Chris and Sachin on Twitter as well. Chris will tweet about the giveaway, so you'll find him there. It's in the description right now. All right, I think we're good for this week, guys. Thank all 150 of you for joining on a Friday night, now into Saturday morning. Really appreciate you guys. Definitely check out the YouTube channels, Twitter's in the descriptions. And we'll see where Palantir is next week. Guys, over or under? Is it above 10 or no?
We got to talk about that housing crisis thing on Monday or Tuesday next week. That's going to be very interesting. I found a lot of crazy stuff that, like, now that I'm looking at it, I'm like, bro, this is the next housing crash. And it's crazy how no one is even talking about it.
You just got to pop out like 500 videos like Meet Kevin now about it. And like,
nah, I'm not going to do that. But Meet Kevin is actually like onto something when it comes to this housing crash that he's predicting. Like he sold all his properties in January, which is crazy, but it makes sense now that I'm looking at a lot of the data. It's like scaring the shit out of me. This is like one of those Big Short moments, believe it or not. So
okay, we'll talk about it.
And one thing in the housing crisis, remember, I mean, it's not a liquid market. So when the shit hit the fan, it hits pretty bad because people want to liquidate, and you cannot just sold it like a stock. You need to crack a deal.
Yeah.
All right. Sounds good, guys. We will see you all next week. Thank you for joining.
Take care.
Hey, bye, guys. Take care. Stay